And good morning. Welcome to Risk Neutral Trading. This is my virtual trading journal. Let me first say that a moment of silent remembrance here for 911 and all those unfortunate folks who didn't survive. I remember where I was as vividly as I remember standing here right now. So it's always important that we don't let things like that go from our memory and especially in these crazy times here. All right, so this is my virtual private journal, or my virtual trading journal. Let's put it that way. It's not private. I push it to Bookmail, or I push it to YouTube, obviously. First thing is there is welcome. Any times that I refer to here or that you see on my screens are Central Standard Time, and the point of this stream is my virtual trading journal. So. There's no financial or trade advice. This is my journal. I am narrating to provide the what I was thinking piece to the video, which captures everything on my screens and price action. And I allow and welcome people to join and watch and hopefully benefit or get a kick out of it or whatever else. So I stream in 1440p. If it's a little blurry on your end, you can hit the gear button on YouTube. The idea of the stream is that everything I see is captured on the video, and then my voice over here provides insight as to what I was thinking. When I'm talking, I refer to you or whoever else. I'm talking to myself, and I'm welcoming anybody that can look over my shoulder and listen. Strictly my trading advice and where I'm going now is for myself, and it's not my way or the highway, right? This is how I approach the market, and it's just a way. Now, I probably forgot something there, but anyway, you get the important part. There's a description there, a disclaimer in the description here, so give that a read. Numbers out this morning. We've had initial jobless claims and CPI right here. Continuing jobless claims, I'm sorry, and CPI. They came in as previous and higher than forecast, or lower than forecast. I'm sorry. But the initial jobless claims down here, definitely not good. And the CPI numbers were kind of flat. Not hot, not cold. So the Fed should be lulled to sleep until next week. That's all the market cares about, apparently. This is my investing.com. This is a free news service. You can set it up to filter the way you want for your area, your zone, your time zone, what reports what country you're interested in. There's also an earnings tab, which is pretty handy. Not much earnings going on right now, but there's that. We also have another one that I like the format of this one for posting and whatnot. There's also Financial Juice, which is itself free. You can pay for it if you want to. Over here is kind of the same docket or calendar as is the case on investing.com, but Financial Juice kind of has this ongoing squawk box idea here. So the reports are out of the way. You saw a pretty big reaction to that, and let's move on to the pre-market. So, well, here's the reports. Here's the CPI and jobless. The market is breathing a sigh of relief because it wasn't anything a hot number or a crazy number, and all they care about is the Fed cut. So that's, people can be losing their jobs and the economy upside down, but there's a certain group of people that only care about making more money. So that's what those are. We may not agree with the philosophy, but if you're going to be a trader and earn a living trading, then you have to pay attention to that. And that's what it is. Here is the IRT charting. Now, here's the overnight. Basically a balanced configuration. And there's the report. Excuse me. At this moment, if we opened right here, right now, we're looking to open higher in range. Right? Here we're trading. Here's yesterday's range. There was yesterday's close. It's higher than the close and it's within range. So that's that. More stupidness yesterday in terms of, all-time highs. Continued euphoria. This is the NASDAQ. These are the minis here. This is the NASDAQ, and this is my higher time frame micro composite chart, which is a RTH session only, daily candlesticks. Wherever they overlap, I continue to draw the volume profile around them, and that generates then the high and low volume nodes, which are represented or marked by these red and green lines here. Micro composite VPOC, highs and lows, of course. The red and green lines are pushed automatically to bookmap, or those levels are pushed to bookmap, as are the session prices. This is the full session market profile, and I will change it to the RTH session here pretty quick. Volume is pretty light so far this morning, but green across the board. Settlement was 65.39.75 in the ES. And here we are at the book map. Now, this is obviously the dome. Level 2 with resting liquidity, etc. This is the micro composite column where I've entered we put in a new all-time high in the ETH yesterday morning before the open, and then this is as high as we got for the I didn't mean to I got the wrong one there. I'm sorry about that. That's not I didn't mean to do the gap high. What I meant to move was this up here. And I'll just show you how these work. And this is from the 10th. That was the previous high, all-time high back on the 8th. I'm going to push this up here now to yesterday. And then in the RTH session. So you see that was our yesterday's RTH high, and there's the yesterday's RTH session. Now I've got to move this back where it was, but it doesn't really matter anymore. Gap high was yesterday's open, which is gone, but anyway. So that's not a factor. The gap was closed yesterday anyway, so oops, screwed that one up. That is how the micro composite column works. And this is the high and low volume nodes. This is the full session volume profile, which started plotting last night at 1700. We'll continue through today at 1600, and this is the RTH session, which will reset at 8:30, one way or the other. This is my notes column, which is really important to me. And the first thing I do, you notice how there yesterday, all of the session prices and their related statistics here and the migrating volume points of control from yesterday. They were all input just as today before the market opens. The statistics. Now, if we opened right here, right now, how would that open price compare to yesterday's close, which is down here? It's higher than the close, and it's within range. It would be higher in range. So the first thing I do is change the column title to the open type, and I do that for a personal reason only. When I look back at a snap or look at the stream, I can see the title of this column, and it tells me a lot of information, gives me all the information about the overnight and where we opened, right? The relationships. I will then, it also dictates which statistics we use for these associated session prices. Now, this is the IRT session prices, which are pushed continuously from to Bookmap from IRT. My heat map or my chart, whatever you want to call it. No indicators here or on IRT, and only a few lines. And let me say at the outset that there is nothing complicated or magical or mysterious or hard to understand about anything that I do here. And that's the reality of trading. So many people try to make it seem otherwise to impress, get followers, whatever, but it's all just data, math, price action. I have on this chart POCs too. There's a POC for the RTH. There's a POC for the full session. POC is nothing more complicated than just marks the price at which the most contracts have traded so far in the session. 1,960 contracts have traded at 65.53. That's it. The very split second that one of these other price levels has 27, whatever this is, 4,961 contracts, this line's going to move there. That's all there is to it. This is the VWAP for the RTH and the RTH and the Globex. This could be construed as an indicator because it is calculated. So if you want to call me a liar, feel free. This is the mid for the RTH. Then we have the IBs high and low, which sometimes confuse people. That is because of the name, IB high, IB low, initial balance high and low. That is an old acronym or naming convention from the market profile days. But what those two levels really and truly actually represent are the high and the low of the first 1 hour of the RTH trading session. And why this is now reset here, I have no flipping clue. I must have double clicked on that, I guess, by accident. I don't know. Let me see if I can fix that. That's pretty weird. So that's it. And the gradations here, or these, highlighted areas, reflect liquidity. So there's 218 contracts laying at 65.65. That's all there is to it. Nothing complicated, nothing mysterious. Now, let's look at the statistics. That's pretty important. And the statistics come from this study from IRT. It conveniently highlights the correct open type, but only after 8:30. This was yesterday. So we've determined that we're going to open higher in range today, most likely. How does this study work? It looks back over 1,999 trading days. Of those 2,000 days, we opened higher in range 604 of those days. Of the 604 days where we opened higher in range, looking back within a data set of 2,000 days, price revisited the overnight volume point of control 83.1% of the time, or 502 times. Overnight volume point of control, 83.1. Oop, that's all there is to it right there. And I will go down, just down the list. Overnight volume point of control. Next will be the mid at 76.8. The overnight mid, 76.8. The overnight high at 75.5. And that is going to be, wow, almost to the tick of our previous high here. You notice how this line indicator is able to represent all of the levels that are at this price, the flag can only represent one, but I know that the ETH high is over here, so that is going to be 75.5. Was that what it was? Yes. Oh, 76.5. Call me a liar. The next one is the previous value area. Well, let's look at the close. 70.4 is the previous close. And previous value area. Wait a second. What am I doing? Yeah, previous value area is a value area high is 71.4. So that would be right there. Previous IB high is 68.5. Now, where is the IB high living? It's lurking around here somewhere. It's also right up here at the top, so we can't add to that because there's 3 of them in a pile up here. All right. Previous IB low is 61.9, or the IB low is 61.9. And I put that there because I want to be sure about this, but I put the initials because when we reset the session, this is going to change locations, and I'll want to know where that was. Previous high, we already know that's been marked out. The previous low is, or the overnight low is 49.5. That's right here. Ooh, it's going to be the wrong spot. Down a tick. There we go. All right, that's what I'm going to leave for my statistics. Now, those won't change. And here was settlement and the previous MCVPOC. So I'm going to flag that right here as the naked volume point of control of the most recent auction. 100925. That is because this is where the POC was when we closed last night, the RTH session. And then settlement just happened to be right above it. I'm disappointed that I moved the wrong thing here, but anyway, that gap has already been taken care of. So there are our statistics and how they're input. The next thing I do here is the, which is pretty important, is to do the, be able to trade, right? So in order to trade with Bookmap, the first thing you need to do is activate the trade control panel and select a method that you will interact with the application to trade with your mouse. If you choose chart, the only place the mouse is active to trade is the active data column. The DOM, the only place you can trade with the mouse are the DOM columns, and both, you can do both. Now, I also use multi-brackets, and this is where the risk neutral trade management comes in. This is the smallest package you can use for risk neutral trading, and because it needs to be an even number. So the package size is 2. There's 1 stop in ticks for the entire package. I have chosen 12 ticks. You can do that by, risk tolerance of your account, ATR, any way you determine your stop size in advance. And once these once these 2 numbers are been decided, then the first risk neutral scale, or T1, take profit target 1, is automatic because it's for the same amount of ticks as the stop is negative, 12 ticks positive, and it's for half of the package. And then the balance is for the runners. If you're going to do, 4 contracts, it's the same. There you go. Same idea. And then the next thing I do is the multi-account thingy here. That is, okay. So finally, I don't need any of the other facilities or capabilities of the trade control panel because I use multi-brackets. So I confirm that it's the right package size. I know that the inter-trade and trade data values will be here, which are here, will also be displayed up here. And I have set them to display in ticks. So I can now close this, get the real estate back for the screen, and I have all the price data, I have cancel, and I have close. Boom. That's how you set it up. And I'll get into the rest of it in a minute. Now I need to do something that I do every day at 8:20. And that is the TLab snap. So bear with me and my failed multitasking stuff. The TLab is a bookmap Discord chat room started by a guy named Tom B, who is reported to be, and I believe is, a experienced, successful trader. He's had like 46 years in the business. He started in 80 somewhere. It is a book. It's sponsored by Bookmap, right? So it's a Bookmap Discord site, but it is not. You're not required to be even subscribed to Bookmap, and it's completely free. Tom doesn't call trades. He doesn't trade live. He doesn't stream live. It's basically Discord. He does stream for I think from 10:30 to 12 or something every day. I don't participate much there anymore. I used to be in there in the beginning, and then I took some advice from him included of the importance of doing your own narration of your journal, and that's where this stream has evolved from. So every day, though, to contribute what little I can, and thanks, I submit this screen snap at 8:20. Gives the people in there who don't have charting capability that like IRT to see all the numbers that are pretty much important in the relationship of current prices and naked volume points of control and stuff like that. And I share them here every day, so no problem. And I don't make the recommendation for any of the other Bookmap sites or Discord rooms or any other sites because I haven't certainly visited all of them. So how could I do that? How could I recommend anything? And there you go. I do a snap. I put a snap in there of the reports about 6 a.m, and I do that snap, and then that's pretty much the extent of my participation anymore there. My focus is here, and that's it should be. So we're going to open now in 3 minutes. I've covered let's just run through it. I know one thing that I didn't get to in that brief period of time there to do with the setup, this multi-account trading. That facilitates every trade I take on this account is copied to 4 other accounts. Everything I do, move a stop, enter a trade, take a loss, whatever. This is a TopStep evaluation account. And the idea, my thinking when I just started this stream was that this would be a zero to hero thing to completely document the full process with full transparency and accountability. The idea or the process of the zero to hero. I've got one trade left, and these 5 accounts, or one more trade, and these 5 accounts will be XFA, where I can be paid, make payment withdrawals, and then 3 or 4 payment withdrawals, and it's a live account. So that's the entire process. I'm still trying to figure out how to show on the stream the dashboard with the the history and the accountability of the P&L, et cetera. But I haven't figured out how to do it yet without the displaying account numbers and stuff like that. So, and I don't guess it's that important at this point, but it would add to the transparency and the accountability. I realize that very definitely. And so that's my intention, is to figure that out. I've just been so down the rabbit hole working on this, trying to get the code straightened out for a particular back test I want to do in IRT, that it's been driving me crazy nights and weekends. So here we are. We're going to open in 4 minutes. It seems like I forgot something, but I don't guess that I have. Let's look at the pre-market. Now, what are we? Well, we're fully balanced and we're within range. Inventory is 100% long. Here was our open. And we are essentially 100% long above that. The market, I realize, is in the holding pattern and, ecstatic jubilation about rate cuts so they can try to all make more billions of dollars, which is super. I'd like to get some of the, pick up the crumbs there. But you would have to expect, or I would expect, though we've been rotational, inventory is 100% long. There may be some correction. I would be looking for responsive selling at the open to take some profit and to, square up the inventory. There's news is the CPI and the initial jobless claims. You can see that the NQ is essentially the same story. And here was yesterday's trade. So, we're looking at it for naked volume points of control. 64.80 in there. I want to be sure that I sometimes get confused here, or like I said, 64 naked volume point of control. Now that one was very definitely taken out. Here's our MCVPOC. And there's our naked volume point of control at 80, which is right over here. And here's from yesterday. Okay. Just out of curiosity, perhaps. I also plot this same and track this same setup for the micros here. I push and freely distribute or share the session prices, which are what drive this Cloud Notes column and these lines. That would be helpful. Drop something in the, subscribe, drop something in the chat, and I'll hook you up. It's free, and I'm happy to do it. They start plotting live at Sunday evenings at 1700, and it plots 24/7 until after the close on Friday at 1600. No problem. Share them with a lot of people. They use them. So there you go. For some reason, I'm pretty relaxed here. I'm not sure what I cut short, but if I forgot something, I apologize. And here we go with the open in about 15 seconds. I'm real curious to see what's going to happen with this column. Is supposed to be automatically reset exactly at 8:30. Let's see what happens here. And nothing. Right now, this clock saying 29. So the book map clock is a minute and change behind the computer, and that's the problem. How can that be? Watch this, click over, turn over at 1 minute, and this will reset, I suspect. God, that's frustrating. There we go. There's the reset. There's that, and this is exactly at. So that's the difference. Now I have this reset automatically at 7 o'clock in the morning to the time server. I've set up Rhythmic to automatically sync my clock to the Rhythmic clock every 2 minutes. Boy, that is really irritating. I'm not sure what to think about that. And I guess the next question is, which is right? Who's on third? But I guess if it's all relative, that's what matters. So I tell you what would be interesting is it the same as IRT? Because IRT uses, I'm sure, the computer clock. That's the difference. That would be the difference. And I mean, we're not having any big data gaps or data delays. Well, we've taken out the we have not taken out the overnight volume point of control yet, or the mid. Looks like the high is going to be tagged pretty quickly up here. Oh, they've got to get up and make a new high. Of course, that's what am I thinking? They're going to get up there and plop a new one above there. That's for sure. They can't stand that. That is that's a well-known insecurity of the RTH traders. They cannot possibly stand to have. Come on, you son of a bitch. They cannot possibly stand to have the ETH traders get a leg up on them with records or lines in the sand or, important levels. So there you go, boys and girls. There's our open within range. So our assessment of the open type is correct. What do we got for volume here first thing out of the gate? 70% as compared to yesterday. Average two ranges down at 2 points. We'll wander back by here in a little while and see what they've come up with now at that point. Okay, we did another VPOC migration. And we did take out that RTHI, or ETHI, I'm sorry. I guess that's awful close. You see how the IBs are tracking along with volume. 65, 54, 75. Is that right? Seems like it's correct. Okay. I don't know how to, I guess I could put a time clock on IRT here. Excuse me. Okay. Okay. Dokey. Once again, solemn remembrance of 911 and all those people who lost their lives. I remember where I was, absolutely, at this time in the morning. Actually, it was a little bit later. I think it was about 9 when they started hitting them. Now, let me just point out something here that I am trying to do now. I set a vertical line right there at the open. And that line is just nothing more than a visual reference for me as the day plods along here. I want to be able to glance left and make sure that that line is visible. That will let me know that I've got the entire range in view on the chart, so I can be always vigilantly aware of the context. That's really important. And with Bookmap, for me now, remember, this is me talking to me here. For Bookmap, it's so easy to get zoomed into, won't comment. It gets zoomed way in further than I need to be. And also, I try to keep the price scale at 1 point. So I have a continuous baseline for scope or range. So the idea here is that I keep the entire trade of the day, the trading range of the day in view on the chart. And then when I come to an anticipated area that I am considering interacting with the market, I can zoom in and get the absolute, detailed price movement and trigger and setup and all those kind of things. At the first, of course, of the morning, we have only a few minutes, 8 minutes off. So, we can keep it in more, zoomed in a bit more. I am in the process of, because I am developing this trading as a consistently profitable business that I depend on. It is my business, not a video game or gambling or a hobby or some other thing. I approach it as a business of statistics and probabilities. And one of the first things that you need to do with a business, any business, develop a product or something to sell. In our case as traders, you need to identify and develop a statistic or a setup, which is basically an identified repeating pattern or something that you can capture a statistically significant data set of that and then vet it statistically. Does it have an edge, probability, etc.? So that's where I'm going here. The first ones that I'm working on are the IBs, high and low. And that means then that I am just waiting, stalking the market, watching price action, narrating what's going on, looking at the news, et cetera, for the first 1 hour, because the IB statistic doesn't set. Remember, the definition of the initial balance is just the high and the low of the first 1 hour. After that first 1 hour, then they no longer move, and the old well-known IB statistic comes into play. Then I am, on alert for a potential trade, of which there are possibly two. An IB failure, it comes down, doesn't get through the IB, trades back to the mean, which would be mean reversion. The other one is an IB continuation. So there we are. Now you know everything I do. And boy, I feel sorry for you if that's it. Let's mark the, always forget to mark the open. Okay, around the horn we go. News, remember the news. Don't ever forget the news. These guys are, that's ECB, okay. Here's our market on open imbalances. The important thing to remember here now, we've got our reports out of the way. Good and bad kind of mixed, but nothing that's going to shake the market up particularly. You see the there was this the CPI number. It was I'm shake it up significantly. That's 35s. That's 20 handles and back to the scene of the crime. And that's, typical. Let me point out in that respect, though, from a trading point of view, and especially now in this volatile kind of a unidentified risk environment, I believe that if you want to have a statistically significant and consistently profitable business, you better be real conscious of managing your risk. Your first priority or prime directive as a trader is to preserve your account. And you do that by managing your risk. And you do that by using absolute fixed, unmovable stops that you never move, and that you limit your exposure to the market. You limit the amount of time that you put risk on. You tell me how you're sitting right here and you manage this risk. I can promise you, if you think you can, you're wrong. I'll be right back. All right. Now, something that you have to be aware of, and which is I do not see here anywhere, but I am sure will have some impact today, is risk that we are unknown critical risks that can happen, which would, you know, affect or interrupt the auction. That's the whole point of news, is that you have an awareness of when any of these kind of market disruptions are going to occur. Like right there. That's why we track the reports and why we are aware of where those numbers are and all those kind of things, right? That's the why prop firms and some traders, get out of the market when there's a big number coming up. You see the dome go dark, they lift off. There's a reason for that. It's not so some dork in his grandma's basement in his underwear can click the mouse more. You know what I mean? I mean, your prime directive as a trader is to manage your account, protect your account. So that's our news. I would suggest that with this recent political stuff that's going on, there might be some unknown or unanticipated comments by the administration somewhere or another, and that's the big risk that we can't control, that anyway. And so because of that high risk environment that we're in now, I think it's important to be more conservative with putting on risk. Only look at A-plus trades. Limit your exposure to the market. That's my opinion. And remember, this is my trading journal. Now, also, my thinking, if you remember the pre-market, was that we would have some degree of responsive selling to take profit, and we kind of did. We brought the POC or the IB low just pretty darn close down here to the POC. Interesting that this high volume node now aligns with a naked volume point of control and settlement from yesterday. That's not much selling, but let's look at our volume again. See how we're doing. Come on, baby. IRT, I gotta fix this. Well, we've picked up from 70. We've gained 17 percentage points in volume now. And our ATR has come from 2, if you remember, up to about 3.5. This is points per minute, average, or ATR, average rotation. And yeah, a lot of crazy Ivans going on here, huh? Now, here we go. Something that's important to remember, they're going to get this high. I make a prediction. Let me put on my magic wizard hat and make a prediction here. We're going to take this high today. Absolutely. These guys can't stand it. So if you want to impress your friends with being a fortune teller, you can tell them when to expect a VPOC migration, or when the VPOC is going to move into where. And then don't tell them the truth. Don't show them that anybody can do it, and it's based on, remember the pre-market. Nothing that happens here in the market or on these charts is anything different than price action, data, volume, common sense. What's the POC? It's the price at which the most contracts have traded so far in the session. There's 40, 13. That's why the POC is here. The split second that this price right down here at 58 is 40.14, this thing is going to go there. And you can say, oh, now, in the early stages of the market, look at this. In the early stages of a session, who's going to try to think about that? I'm not. But through the course of the day, you can very easily see when we are building volume at a specific price and with reasonable accuracy, anticipate a VPOC migration. It's not, there is no part of this or any of these lines that are rockets, that are mystical or magical. So there you go. And they've been able to bring that RTH all-time high up a tick. Predict that by 9:30, by the time the IB is set, we're going to have a new all-time high in the RTH. There you go. Send money. Oh, sorry. Wrong window. God damn it. Here we go. What I was talking about was these levels here, and the same thing I talk about in the pre-market, but here's our IB high, here's our high of the day. This IB high will now move up here. Here's the MCVPOC at 42.95. The minute one of these says, well, look how close this is, 42.60. Only got to go 36 handles, and then this price is going to move up one tick. That's it. Numbers, data. Simple. Trading isn't simple or easy, but the stuff we use, these tools that we use, and these lines on the chart and all that, and you'll know, no, I don't use Fibonacci and 1,000 flaming bloated gizmos or whatever the hell you want to call them. I don't do that stuff. And if you do and it works for you, like I said in the pre-market, absolutely do not quit. If it ain't broke, don't fix it. And here is my prognosis. My prophecy has now been fulfilled, boys and girls. Spend money. Avoid the rush on doomsday. Repent now, We have a new all-time high in the RTH session. Gee whiz, how did I know that? Common sense. Logic. A little bit of experience, I'll admit. Because I'm well aware after years of doing this that the RTH traders can't stand to have the ETH people have levels. And this is a new all-time high. And there we go. And I'm sorry that I closed off my 401k day before yesterday. I'm sure it's up a bit now, or would have been. But I was no longer comfortable with someone else, my little bit that I have in there being at the mercy of these markets and in the political and environment that we're in. So that's this move I made on Tuesday. And there's our new all-time high, and there's our new... I'm going to get rid of these things. There is our new, whatever I was going to say, our new all-time high in the RTH. What a surprise. Could you trade that? I guess so. You could have traded this, mean reversion here. Would have been a pretty short mean reversion, but you could have done that. And they're happy as pigs in the mud right here now. What do we got above us? We've got some resting liquidity down below here. No huge lots or no huge levels. Well, what's going on here? Nothing. Irrational exuberance. In the words of Alan Greenspan. I wonder if he's still alive. I remember the Fed backed Paul Volcker, Alan Greenspan, Bernanke, what's her bucket, and now Powell. And then I suppose it's going to be Howdy Doody or one of the other puppets, or another, a puppet who shall be named. Next, I guess. Wow. Yellen, Janet Yellen. I think that's as far back as I remember. I remember very definitely in the .com late 90s, kind of 91, that before all of this social media and AI and all of this kind of stuff was the case, when there was still real news agencies and numbers were actually, not massaged because somebody wanted them that way. When Greenspan would testify before Congress, which is what used to happen a lot, and there weren't all these press conferences and stuff all the time, signings of this and that. But as far as the Fed goes, the reporters would judge his comments and perhaps the mood of his comments, which would be affecting the market, by the thickness of his briefcase when he would get out of the car to go into the congressional hearing. And he was a funny guy. He had go back and listen to some of his testimony sometime. He had quite an highly developed, diverse vocabulary, and he would be giving his statement and his testimony or an answer to somebody's question, and you could tell by the look on the congressperson's face they had no goddamn idea what he was talking about. They didn't understand 5 out of the 10 words that he said. It was pretty funny. And I don't think he did it to be maybe he did as a power trip. I don't know. Or maybe he just had a good vocabulary and figured they should too. Alan Greenspan. I'm pretty sure Paul Volcker was the first that I remember. I started trading in 1999. Like this. I had messed around with penny stocks and, had I been intelligent, or, that's the only word I can find for it. Now we're getting directional here, which would say to me, not to interrupt my anecdotes here, but we're getting directional as opposed to rotational. And I'm happy about that because the trades that I am betting, as I said earlier, are the 2 IB trades, initial balance trades. And I prefer the IB continuation trade. That's been the best for me, profitability-wise, for a lot of reasons. main one being my conservatism and the range requirement. So, yeah, the fact that we're making some ground here, excuse me, is okie dokie. I think I'll leave that there and change the text to black. It always tickles me how they do that. Boom. Oh no, boom, boom. 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 I realize this is all. Remember that I'm doing this stuff as a part of the permanent record of the stream. Now here we go. We're getting some VPOC migrations here. As I said, we're tending to look directional. And I'm going to throw this up here for now. This is the IB high and will soon be the, by definition, is the, God damn, sorry, RTH high. So I'll get this over here and I can just keep nursing it along. I guess you can see, yeah. Oh, come on, fingers. What's going on here? My fingers aren't doing what I want them to do. All-time high. There we go. 1109.25. Boom. I didn't put the all-important RTH on there. Sorry. Because that's important to me. There we go. And now you see we have the developing value area high right up here at the top, meaning that they're pulling value up. Value area is just the first rounded off to 70%. Where 70% of the value of the volume has traded on either around the mean. And then the POC is the mean, basically. And the mode would be the mid here. And the VWAP is the volume weighted average price. So there we go. There we go. Here we go. Something. Well, I'm just seeing that money laying on the table from that 401k. That's just frustrating. Okay, what are we doing? Higher, higher, higher. Yep. Oh, look at there. We've jumped up a handful of ticks just since I set this level. Well, they're going to keep going until the cows come home, I guess. Good for them. What am I doing here? What am I doing? Okay. Look at them go. Look at them go. My. What's going on now? Yeah, Trump's at a 911 event. You can bet there's going to be some risk, unrecognized critical risk potential there. And I'm not saying there's anything wrong with them doing that, or there's anything wrong with, I mean, whether I agree politically or don't agree politically, or agree with the methodology or don't agree with the methodology is immaterial. It's a fact that this administration uses social media, and anytime they're near a microphone or a camera, you never know what might be said. That is an unrecognized potential critical risk to disrupt the market. And if we're dealing or trading in a relatively narrow environment, you know, my 2-lot risk neutral package has a 3-point or 12 tick top. That means 3 of these numbers here, and I'm out, or anyone else is. So you have to be aware of that. You know, that's all there is to it. That's all there is to it. I believe. I'm going to do something different here. I'm going to do the piano lady. There we go. Personally, I prefer, you know, my preference is to have a more normal, more measured, thought out situation rather than kind of a random. The feeling I get a lot of times, like around, you know, that April Independence or whatever that disaster day was with the tariffs and stuff, it's like they kind of, the methodology of this administration seems to be to run something up the flagpole and watch what happens. If the market craters and the bond market falls over or whatever else, then they run quick like a bunny and well, we're going to postpone those for 90 days. If nobody says anything, then it was a good idea. You know, I guess it's kind of management by or administration by public opinion poll, maybe, kind of, you know what I mean? Not public opinion, but market opinion poll. And maybe that's a valid way to do it. I certainly haven't been alive long enough to have experienced all forms of administration in this country. The first president that I remember and was Eisenhower, and I've remembered them all since then. And this is absolutely the first situation in my lifetime where this has been the way it's been done. And, you know, I'm not saying it's right or wrong. I'm just making a point, making a statement there. And I'm trying to figure out how to deal with it, right? And that should be what every trader is trying to do. Because your preservation of your account is the most important, you know, mission. And you preserve your account and grow your account by properly managing risk. Your reward to risk or risk reward ratio must be such that you can compound the account. These are just basic things having nothing to do with politics or anything else. It's a fact, Jack. And we're having a situation now where this continued VPOC migration is happening. We're at the new all-time highs by a bunch. Everybody's so excited. So we're in a more directional environment, it looks like. Now I need to start anticipating. We've got 15 minutes until the IB sets. So let's start with thinking about trading as a business. I believe, and I have nothing that I, determined on my own, but that I believe that the most successful traders in the world have all come to this conclusion, and therefore I think it's, democratically correct. We are in a pretty much random environment. It's a statistical fact that the outcome of the next trade is 50-50, whether you want to believe that or not. It's the truth. The market it's binary. The market can go up, the market can go down. Period. Horizontal movement is only a function of what we put on it as traders and people. So, like a coin flip, the outcome is 50-50. What you need to do in that instance then is to, as I alluded to earlier here, you need to identify a recurring pattern, which seems to have a long history of recurrence and consistency. And then you establish the criteria that you will use as a trader to validate an entry for that setup or that signal, and trade it, and rely on the law of large numbers to manifest the edge from that statistical analysis to your bank account. So there you are. Sorry. The first one I have chosen is the IB, the two IB trades, which I spoke about earlier. Now, the initial balance high and the initial balance low. Okay? The initial balance statistic, first of all, does not happen, is not a thing until 9:30, because the definition of the initial balance high and initial balance low are the high and low of the first 1 hour of the RTH trading session. So it's not a statistic until 9:30. Now, after 9:30, when the statistic becomes active, it is a statistical fact in all four open types that there is greater than a 97.9% probability. 97.9% probability that the IB high or low will be exceeded by price in the balance of the RTH trading session. And here they are, right in front of you. In today's open type, to be specific, there is a 98% chance or probability that the IB high or low will be exceeded. Now, there's a couple of things to really be careful about, in my opinion. One of them is do not trade to the statistic. I was guilty of this, and I have the data to prove that that's a bad idea. What do I mean by that? Well, the statistic is not set yet, right? It's not 9:30. But in my in my anticipation or excitement and exuberance, or yours or whoever, well, we're above the above the VWAPs, we're above both POCs, we're right below the IB high. I think we're going to take the IB high and you get long right here. That is a real losing idea. The statistic has not been set, and I can tell you from personal experience that that doesn't work. That doesn't have a good probability of success. After the statistic, after 9:30, you can anticipate, and then you apply. Now the statistic has been set. Okay, it is not the statistic has not been satisfied until price comes up through the IB high or the IB low. Now the stat has been satisfied, at which point you can determine if your homework guides you to take a IB continuation trade or an IB failure trade, which is a mean reversion. So what do? I've got 9 minutes or 8 minutes now to anticipate what I think is going to happen. And to watch, I can zoom in and watch price action more closely. I can keep an eye on the entire context here of the day, which is what I'm going to do. And this is an all-time high. So in order to have a VPOC, in order to have an IB continuation trade, you're going to want to have a breakout and continuation of not only the high of the day, but the all-time high ever. of the ES. So there you go. Anyway, that brings us back around to trading as a statistical business. You know, you want to capture a statistically significant data set of this setup and your parameters. And by statistically significant, I mean enough instances that you're out of the suspected range of random distribution. You can flip a coin 10 times. We all know, everybody I think on the planet will agree that the probability of a coin flip is 50-50. You can flip a coin 10 times and nobody's going to be surprised if you get 8 heads or 8 tails or whatever else. A predominance of one or the other. Now, you flip that coin 1,000 times and you're going to be narrowing in on 50-50. So with a trade, it's with a trading setup and vetting your trade, it's the same idea. You want to have at least 100 trades, 50 to 100 trades in that data set, so that, and they have to be identical. You can't have different stops, different T1, different T2. They've all got to be the same. Otherwise, they're not valid. You know, how can you compare? How can you do a statistical analysis? Well, out of 100 trades, I achieved T1 75% of the time and T2 80% of the time, and somebody, whatever percent of the time I was stopped, whatever percent of the time I took a scratch. If those values are not all the same, how can you say I was stopped if the stop is 10 points one time, 100 points the next time, 5 points one time? Same way with the T1. They've all got to be the same while you're doing the vetting process for the setup. After that, you can trail your stop up, you can do trade management, all those kind of things you want to do. Never move your stop away from entry, but you can do the trade management kind of things that you want to do. But you cannot do that while you're vetting a trade. So at this point, if I took, for example, an IB continuation trade here and put it on for, I'm not saying that's the case, I'm saying if that happened, I use my risk neutral 2-lot package, I put the trade on, I put the mouse down, stand back. Because I want that trade to be part of the data set, because I want this over with. You know? So there you go. Now, we continue to VPOC migrate up. Here's our high of the day. Here's our developing value area high. There's the IB high. There's a new all-time high of ES for the world. And we have 4 minutes left before the statistic is set. We could run up here 20 points. It would not be a statistic. The IB would move up. The IB will continue to move up until that number says 930. And there you go. It's actually cooled off around here. It's about 27 C today. That's kind of nice. About 77, 78 F. It is only 8:30 or 9:30 or 9:20, almost 9:30 in the morning. However, okay. Ooh, now the full session VWAP or VPOC has migrated up to join the RTH. And what are we going to do now? Okie dokie. Pretty close, boys and girls. Pretty close. And there is 9:30. Now, the statistic has been set. The IB high will no longer continue up, nor will the low. They're frozen now. They're fixed. The statistic is in play. It hasn't been accomplished or satisfied, whatever you want to say, but it is in play. Meaning that if price exceeds the high, that will satisfy the basic statistic, and if it exceeds the low, that'll take care of that one. Either way, the statistic says IB high or IB low. There is about a 25 or 30-something% probability that we will take both. 98% IB high or IB low. IB high and IB low is 32%. Whoop. And looks like we're going to take the IB high, doesn't it? Remember when I said don't trade to the statistic? I'll tell you that I know something I need to do here probably. Well, are we going to get it? Oh, I bet we do. I won't trade on it, but I bet we do. My prognosis is that we do. And there's the 1 point. 1 point high and in range, full session in range. What are we doing, boys and girls? Well, we're consistently trading up. Consistent VPOC migration higher. Context is up. There's our statistic. Now, what are we going to do? I would be not able to even think about the IB failure for a couple reasons. The first being, there's no range to the POC. If the IB failure is by definition a mean reversion trade, well, there's the mean. That's just barely the risk neutral scale. And your mission in life, it's not intelligent to put risk on if your potential target is a scratch. Does that make sense? Now let's see what's going to happen. Are they going to come down and test this and trade higher, which would be the IB continuation trade? Maybe I missed it right here, but that's a little too quick for me. That isn't much of a pullback. I would want to see it basically come down here and test this IB or VPOC before I thought about an entry, frankly. Before I thought an entry signal was valid. And if you're real quick and trading in real fine time frame, your fractal is this little bitty thing right here. Well, there you go. You know, you try burp, burp, burp. Not me. I'm not fast enough to see that and do it. And nor do I think this to me is noise. There's 2 ticks now. And maybe that was the signal right there, but boy, oh boy, I'm not that quick. And I don't believe my analysis isn't that you don't just blindly throw one on when it takes the statistic. That's not it either. Assuming that I had done that, there's say we're in at 79.25. That's just a scale right here. It's only just scaled there. Just barely 82.25. Well, that sucks. I tell you, I really admire quants that are logical and methodical enough and then skilled enough with code to eliminate discretion and fully automate the trading system. You know, and I would love to be able to talk to one to see what their thinking is because I have, you know, as granular as I try to get this process after. I mean, the statistic. Who the hell can't see when the IB high is going to be taken out, or when the IB stat has been made? That's absolutely. The nuance comes in. The real meat on the bone comes into the parameters that justify the entry, and I have recognized in myself that the final trigger pulling decision comes down to a discretionary point, and that's not good, I don't believe. I actually really shot myself in the foot last week with I had the setup completely. I had my mouse in position, and I mentally had gone through the checklist which way on the mouse to click, because it makes a difference over here and with Bookmap. And just the one element I didn't do was push down on the mouse button. Went on to both targets and was exactly, would have been a successful trade. Regret, boys and girls, regret. And now we just continue to plug higher. That to me is noise. That's a one tick bop. I don't think that makes any sense. And anything now is chasing, right? It's FOMO, it's chasing, it's all of that stuff. Because it left the train left the station without you. Disappointing, but true. Disappointing, but true. Sucks, actually. Well, I'm going to step away here and refill. So if you're tuned in here, get ready to trade. Usually something happens when I do that. Well, that's pretty darn disappointing. Now, I'll point out to you that it has not achieved T2 yet. That would be 82. Oh, wait. What am I talking about? 79, 89 now would be 92. You see how quickly I can get off with the, by having this scale sucked in, or expanded, I guess is a better way to. Now, if I'd have gotten in at this little hiccup down here, which unfortunately I did not, that's, let's call it 79.5, or be real flexible, call it 80 for easy math. 83 is our scale. So there would be the scale. And then we've got to get to 90 or 10 points. And then we've got to get to 2 more of those. We've got to get to 92. This would be the level for our take profit target, our T2. So far, we've only achieved a scale. Would have only achieved a scale. I think it's really important to keep a proper perspective here. And by doing that, I'm going to get zoomed into my blue boy over here. What's our context? Pretty definitely up. Excuse me. And let's get down to about 1 point if we can here. Wait a minute, I'm going the wrong way, sorry. So there's 1 point. Now this is 1 point high. And the full session is in view. So let's, here we are again with our 80. Well, 80 was a little much, but you see how your perspective can change. There's the IB high. There's 80. We would be scaled at 83, which is right there. And we wouldn't have gotten close to our T2, which is up here at 92. The problem I have at this point in the day in the market around these all-time highs and these crazy fractals that we're getting here, these little distributions, if it comes back down here, I would want to let it play out down to the POC and find out if have they done enough damage up here? Do they think they've accomplished enough and now they're going to trade it back the other way? I don't know. These are all the magic of trading. And none of this is a test. I mean, typically I want to see it take the statistic, trade like this, back down, maybe can't get here, can't get past here and come back up, then there's your long. If you're talking about an IB continuation trade. IB failure would be the other way around, obviously. But there's no IB failure trade because here is the mean. The mean is mean. Sucks. are back at the IBI. I better get to watching this now. Well, now, what did we do? That would have been an IB continuation setup, and I was busy dealing with something in the other part of the house here. God damn. Oh boy, that's disappointing. Not that that has all the, the range that's required, but that was a much more in my wheelhouse setup. Than this little guy over here. It may not go anywhere, and I'm not gonna chase it. This is not looking very conducive for an IB continuation trade. And it's interesting to point out what the NASDAQ is doing. Which often leads to the pack here. I don't see a failure trade here because there's nowhere to go. The mean reversion is 3 points. I don't know. Let's see. what to think. I don't know. Here. I guess I'm going to be sorry I didn't take this IB continuation back here when it retested. From the looks of it. Not that that it's in profit, but it would have been scaled. And now it's too late. Now it is called the chase, and that is really a bad idea. Important to know that, no profit targets had been hit other than the scale at this point. And why would we continue to go up? Excuse me. Well, in hindsight, which is obviously always so clear in the rearview mirror, this wasn't a setup of mine. This was a better one. You, of course, don't know that this is coming at this point. And I should have taken the trade just mechanically. I should have eaten my own dog food. I would be scaled, and then I would be sitting here wondering what's going to happen next. And that's, that. Unfortunately. And I got to stop doing unfortunate things here. I'm tired of this. I'm turning into a professional procrastinator here. That's a skill I developed early on, but I don't want to. It's not worthy of maintaining or developing. I mean, just, random thinking here. Hey, there was no reason to be putting in a new all-time high today at all, data-wise or economically. Apart from we're going to show those ETH guys who's boss. And then, which then says, why would it be one to get higher? Why does it need to go higher? It doesn't. So had I taken the trade as I should have, I would be scaled, but I wouldn't be expecting any more. I wouldn't be surprising at all to me if we've tested up here 1, 2, 3 times and we revert back down here to the mid and the mean somewhere, or the POCs or the VWAPs or something else into the, from this distribution down to this one and maybe down to this one. Who the hell knows? But once you're scaled, then it's just, at this point in the vetting process, it's just put on the helmet and stand back. Because trade management past this, just putting on the basic bracket can't happen, or shouldn't happen. Let's put it that way. Because then the trade would be, now if I did the trade and all 5 of these got out of the eval into the XFA, okay, that's a pretty good win. But that would have been breaking a rule, and that's a bad habit to reinforce, I believe. Well, what do we got here now? I have no idea what's going on with news and risk, etc. Not sure I want to look, to be honest with you. Okay. So we've got a lot of IMF stuff. We do have a bond auction coming up, so they got past all of that. This moron, this Lechnick guy was interviewed on. He's the CEO of Cantor Fitzgerald. They were the biggest trading firm, or they had the most number of people killed in 9/11, including this guy's brother. And he is a good friend and neighbor of Jeffrey Epstein, and put his 2 sons on the board at Cantor Fitzgerald as opposed to people who had worked there for years. So he's fits well in with the club, I guess. So I understand. What do I know? That's why I don't like looking. I don't like looking at the news. I'm a little surprised that, of course, it's probably not over, I guess. The Switzerland, what in the hell? Wow. Yeah. Well, been in the market an hour and a half now, an hour and 40 minutes. Market open, I should say, an RTH session. Didn't put that very plainly. Let's see what our old buddy volume is doing. Yeah, we're about where we were. We've come down a little on the ATR, and we're at about 92.8%. So that's pretty much putting along normally here. This is the SPX, though. That's not so great. Excuse me. Okay. And here we are. 1, 2, 3 distributions to the upside. We have no excess on the top. That suggests that the auction is unfinished up there, and that I would expect us to get something. However, it is kind of a trend day, and we're, at nosebleed levels up here, so who knows? Who knows? Pretty good volume. Everybody's green. 0.67% up on the NASDAQ, or the ES, I'm sorry. NASDAQ is 0.57. Six handles, huh? We're just thrashing around here, I guess. Who the hell is that? Oh, that would have been the take two profit right there, or the number two top profit target right there off the IB high, and we now have this IB migration above and outside of the IB level, more than 3 points. That's a real positive sign, and I'm busy. Jesus, I don't seem to. My timing seems to really suck here. Talking to somebody about these termites treatment that has to happen here. Yeah, that's pretty darn disappointing there. Damn. Quite the missed opportunity right here. Now, the reason I didn't react was the proximity of the VPOC just below us here. But clearly now, that was as usual in hindsight, it's the unfortunate situation. this is a situation where taking the trade setup when it presents itself based on the back test, and then holding, and it works out your way. That's the 50% that it went your way, as opposed to the 50% that it didn't go your way. And that's what I've got to get around somehow. I've got to get to that point. That's disappointing. That would have been a real nice continuation trade and over the hump, and I'm dealing with termites. Jesus, what a pain in the ass. Well, what happened here now? Looky there, huh? You see how it happens? You got to strike while the iron is hot. And I am busy dousing the fire here. Termites, for crying out loud. But hey, you got to do, you know. I guess I don't want the house to fall down on my head, or on our heads. But this was clearly the perfect IB continuation setup and trade, reinforced by the VPOC migration and on to both profit targets. So I really dropped the ball. This will be entered as a missed vetted trade in the chapters here, in the whatever you call it, the timestamps on the stream. And it is from back in, where are we now? Time-wise. Well, let's see, we're at 251 in. And that was 1051. So yeah, once again, my hesitation was incorrect. The thinking was, or my rationalization was, first, I wasn't here at this point, but with the VPOC so close below, that looked to me like a not favorable condition, and I was clearly wrong, and that's called wussing out. That's the word I have for that from Montana. And there was the perfect setup and scale and T2, just barely T2 right here, but hey, close counts and horseshoes and hand grenades, right? and trading to some degree. So there's that. Now I got the termite drama sorted and coded and off to the powers that be, and now I'm gonna lick my wounds here on this missed trade, and should be no question in anybody's mind what we're doing here. Oh, I'm being whistled at like that's how the wife calls me for the breakfast treats. Ooh, lucky. I'll be right back. And I guess I should qualify that the wife is spelled B-O-S-S. And she's a sweetie boy. I don't know how I got so lucky. It's amazing. And I will be right back. Now we're having VPOC migrations that are working out pretty darn sweet here. We've had one. Well, actually two. 1, 2, 3, I don't take those. I have not vetted those properly, but they're working out. Well, they keep going, huh? Keep on chugging. Make a prediction here that within, let's say, by the end of the year, that's too far out. Never mind. This market will pull back, obviously. The market goes down. Where's my mouse? Well, I don't know why you're doing that, baby. Market goes down to go up and goes up to go down and goes down to go up and goes up to go down. Right? Let's look at it in a bigger scale here. This is hard to keep in scale because it's such a dramatic, big moonshot. Well, here let's have some tariffs. Market goes up, go down, goes up to go down, goes up to go down, up to go down. You know, now what are we doing? Well, we're at nosebleeds up here. Up to go down, up to go down, up to go down. What do you suppose is going to happen over here at some point? Don't know when. I'm not sure that that's a thing you ought to try to predict, but it is pretty obvious that this market is not going to, I mean, ask yourself the question, why in the hell are we doing this? Because NVIDIA is making money? There's the recession is building, inflation is building, unemployment is building. It's the worst jobs market. Let me rephrase that. There's a statistic that, based on the results of, I think, Tuesday or Wednesday, it was the hardest time to find a job since 2003. Not good, huh? Those are not signs of the economy flying through the roof. Just because Oracle and NVIDIA and Meta think they're going to make $1 billion sucking up all the energy available by the power companies to do AI for what? To lay off more people? I'm not sure this whole thing is going to work out very well. I'm not sure there's going to have a happy ending. And another thing to think about or to be aware of, internet search, etc., is useless now with this AI crap. And here's one to think about. The AI people, you know, the Metas and the Chat GPTs of the world, train their language models on data. Where do they get that data? News sources, internet. They've already been sued for billions of dollars by Bloomberg for using a bunch of their Bloomberg proprietary news to train their models. So take it one step further. If advertisers on typical traditional search things like Google and wherever don't get paid anymore because search advertisers are not promoted to the head of the search because there's no search anymore because it's AI now. What motivates all of these news people to generate content? Pay people to do, reporters to do, investigative reporters to do the work to determine the news? What motivates them to do that? Nothing. And what does that mean? That means that AI suddenly has no updated information. They're just regurgitating, you might go back and base your world on a history book from the 50s. And that's what we're looking at, potentially. So, and this is falling on deaf ears, of course, but, I don't think it's going to end well. And apparently they have recognized that all of entry-level, here's another one, entry-level programming, entry-level finance, entry-level type jobs, accounting, HR, all those things will be replaced by AI. Okay? So how does someone get to senior level if there's no junior levels coming through? How are their management and containment and quality assurance people if there's no junior programmers? Who's going to do the programming when those guys die off and there's no junior programmers because they've all been replaced by AI? Will AI just take over doing everything? And then who's going to oversee that? That seems kind of weird to me. Maybe just me. Boy, look at us go here. And another VPOC migration higher. My goodness, did I make a big blunder right here at this one? And let's see what if we get the higher move to higher ground over here on this VPOC migration. So the 12-to-1 trade remains in effect here, or statistic perhaps. Really, I'm really tired of this whole thing. I'm tired of the conservatism that is required to vet these trades in this manner. I've got to get the backtesting system to work properly so I don't have to do this anymore. So this is the, looks like we're trying to put in a 12-to-1 statistic here, which is the market is, first of all, the parameters around that are the market needs to be out of balance, which it is. It's directional. That's pretty obvious. And it's really simple statistic. It says that if we put in a new high in an out of balance market, so we need to be up above this, between 12 and 1 or 12 and 1300, there's a 90+% probability that we will take that high out at some point in the balance of the trading session. It's kind of like the, it's a lot like the initial balance statistic, except it is a high or a low, an extreme between 12 and 1. So we would need to get up here, and then there'd be a high probability before 1 o'clock. Then there'd be a high probability that we'd get higher. And we've got, 300 contracts living up here at 66. It's 100 points in the ES. I'm sure. Sorry, I cashed in the 401k earlier this week. No, I'm not crying over spilled milk. Money left on the table. Well, no, technically no 12-to-1 trade here. And I'm trying to sort out some back testing with while I'm just standing here watching the market flop around. Really annoying. All right, I'm working with a couple of guys on some code here from the other back testing. This is just flopping around in the middle of nothing. The code did, checking the code and talking to these fellas, did point out to me that this IB high right here was the perfect, this was the setup, and this is what I missed right here. This was the missed trade, which I've already got in the system, but this was definitely the right one, even coded in my backtest system. You see how the entry and the first take profit target, and then second take profit, second target to the full full profit. And I'm a little bit puzzled as to why this didn't take it. And there wasn't enough selling up here to close. It's based on the close. And that was the close up high there, I guess. So that's how the back tests were working. One of the back tests. That's in the IBC trade, not an IBF, by the way. Just hanging on, huh? What a day. Well, the power hour. What a do nothing kind of day here. Fun fact about the Treasury Secretary, his hedge fund lost billions with a B. Perfect. 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 Okay. Still pretty flat on the top there, which is kind of interesting. Very little Very little excess up here. $50 handles here basically today. 45. Hello? Hello? Yeah, hold on, let me get the headset thing going here. Can you hear me now? Okay. Yeah, no problem. What do you? Yeah, well, no problem at all. Yeah, exactly. Good for you. Busy's good. Keeps you out of trouble. Well, of course, the phone call when I least expected. Here's our new. Oh, they're going to get 6,600 absolutely here. Absolutely. So that would have been one hell of an IBC, wouldn't it? What a waste of what a bad show on my part. So the next order of business will be the recap. We opened higher in range and just traded up. What else is there to say? The IBC right here was phenomenal, and I didn't take it. Actually here. Trading up here to the top. Now we've got a little excess. Remember I said this looks too flat up here, and I think we're going to get higher, and we did. The NASDAQ still a little bit chopped off looking. And here is our daily. What did we end up doing for volume? Stayed right around 90s, and we're now down back down to 2.5 ATR now. In terms of news, tomorrow we have Michigan numbers out, and then it's kind of flat across the day. That would be a Friday, I think. Isn't tomorrow Friday? Yep. No earnings to speak of. Michigan can move, this Michigan number can definitely move the market. All eyes are absolutely on the 17th and the Fed number, but Michigan can move the number, can definitely move it. Financial Juice, by the way, that's both Financial Juice and investing.com are free. And you can filter for your time zone, etc. There's a paid version if you want to, but knock yourself out. We had the 30-year bond auction bid to cover at 12. And this is Financial Juice, obviously. And it has basically the docket over here and then more of a squawk box feel going on this side. Pretty quick at 1450, we'll have the market on close in balance, which is printed over here. How could, this is so contrary to the rule of law. This woman is not convicted, tried, charged with anything. That's pretty, that should open some eyes, actually. That should definitely open the eyes of the public. In my opinion. So there we have that. And we are, we have been in an uptrend. Context has been up all day. Never-ending joy in the markets, and we've got in a new all-time high up here, just 2 points away from 6,000, which I'll be kind of floored if we don't jump right up through that on the market with the market on close orders, to be honest with you. That's going to be in 5 more minutes, and then the stream will be winding down at 1500 as usual. This has been a pretty slow, boring day. I can appreciate that. see what we do tomorrow. And next week is going to be fireworks. Absolutely. I start the stream every day at 8 o'clock in the morning, Central Standard Time. All the times on my screens are Central Standard, or that I refer to. And begin with the pre-market and reports, pre-market setup, analysis of what the overnight did and what I would expect for the day. We did have a little bit of responsive selling at the open, which is what I expected, to take a little profit, and then off we went. Not in any form of a gap, so that's not it, but you know, there we are. All right, we're going to market on close here at 1450. Yeah, here we go. We're going to take it into the close here now. Higher highs, new high, all-time high, everybody's high. All right, so we got that 6,000 just to the tick, and now we're pulling back. And I am gonna get off back to what I was doing here, which is pretty disappointing in terms of the stream, I realize, but you know, looks like it's only me suffering through this, so I'm maintaining the transparency and the accountability of each trading day. So there we go. Do something healthy for yourself. Get away from the screens, rest your eyes, go to the gym.